be pretty casual. All right, my friend, you ready to rock this party here?
I'm ready to rock and roll.
Rock and roll. I really think we should just start playing our instruments. That would be really fun for everybody.
We should, if we could get the mics to work that way. You at least your guitars are displayed in your back. Mine are on like the side wall over here. So people
actually, that's just poster board. That's just no, just kidding.
No,
they're real. Unfortunately, they stay up there too often and they don't come down, which is why I keep the acoustic right here for the in-between unlikely situation where a Zoom meeting ends 2 minutes early. You know what I mean? So otherwise, you know how it is. If you don't play, you lose it.
Exactly.
Well, thanks everybody. Oh, sorry. What's that?
Sorry, I was going to say, what acoustic is that?
This one here was the first acoustic guitar I ever bought. My daughter has managed to put stickers. There's Elmo stickers all over it. So it wound up being relegated to the office. I have my nice acoustic at home, which thankfully, if anybody who's on here plays an instrument, make sure you expose your kids to this because super important to get them exposed or otherwise you don't have that connection. And my daughter started picking up guitar. You know, both of our kids play piano.
Yep.
And now she wants to start playing guitar. So maybe I ruined that whole 5 years of expense.
You got to get the Fender thing I told you about that you can just plug in headphones and you're
all true. Set. All right. So here we are on a visual discussion talking about auditory. So we apologize for being authentic. No, we don't. We'll never apologize for that. I'll apologize. I had my wisdom teeth out this morning, so I'm kind of talking like what'd you call me? Like Dark Helmet from.
Yeah, you were like one of the guys in the control room.
Yeah, I feel it. So we're going to do our best to deliver some, good conversation and hopefully some ideas here today for all of you in the financial world who probably affiliate with being visual or likely are a communicator. And that means you need to be paying attention to how to deliver visual experience. And Ross and I, it's interesting because, our space is so small. Those of us that are delivering technology and ideas in the fintech space, we run into each other. So I just kind of share for a lot of you that are coming in and maybe new to visiWealth. I actually saw visiWealth first when Kitsis added you to the advice engagement category, which we've been really championing. And I was like, wait, where'd these guys come from? And so, I found out about Ross and we instantly hit it off. So do me a favor, Ross, give us your background because I think some people know me and happy to introduce myself after. So Ross, What's your background?
Sure. Thanks, Adam. Well, you use the term recovering advisor, I usually use the term recovering CPA, even though I still have a CPA license, still practicing. That's kind of how I got my roots. Worked at big four firms and moved over into academia. So for basically the past decade, I've been involved in both working with clients, but also training and educating advisors. So ran a CFP program at a small college here in Connecticut, then moved over to the American College of Financial Services. I think that's where you and I first connected, Adam, when I was still there. Professor there, ran CFP, CHFC programs. And then most recently, a year ago, moved over to the Investments and Wealth Institute, so formerly IMCA. So basically overseeing CPWA, CIMA, RMA designations, and also all online education that comes out. So I've managed to kind of keep that pracademic hat on by still staying up to date with some research, being a practitioner, and also teaching. I love building really cool experiences and really cool things. And that was kind of the impetus behind starting visiWealth about a year ago.
Well, I think what's really interesting about this is that because you have this educational mindset, you're leading with literacy. And for most of us that have been trying to, communicate complicated ideas to clients, obviously where Asset Map came from, try to make the complicated simple, but not so simple that we felt like it was Fisher Price and we'll call it too rudimentary. Simplistic is not our aspiration. Really simple, rich is. And I think the interesting thing about it, when I got to see visiWealth, do you see my screen, by the way?
I see your screen.
You do. Just to make sure. So when I started seeing his library of things that I had drawn out on top of the asset map or elsewhere on a whiteboard or trying to yellow pad, this was really awesome to know that there was a library of single page visuals. So I think this would be a great opportunity for you to walk us through what your logic is. And then we're going to show everybody the mashup of the two platforms that we've been playing with that's available right now. And I think you're going to find this really cool. So why don't you share? I'll stop.
Awesome. So yeah, a great segue into that, Adam. And like the way I'm thinking about it, and really advisors should be thinking about it, is we're really in the business of simplifying the complex for clients, as you just mentioned. And so really the foundation of what we're building, or what we really think advisors need to focus on or have systems in place, is to do these three things really well, or at least have these three things. And the first is comprehension, right? And this ties directly back to advanced degrees, designations, pursuing continuing education, going to conferences, right? You need to actually know and understand the concepts you're talking about before you actually go out and talk to clients about it. So that's really the cornerstone. And then it moves into, well, do you have a system in place where you're able to efficiently and effectively curate content? I mean, I have fallen, victim to that as well, where I'll occasionally still go to Google something, right? We're all kind of in that mindset of, we've been trained to know how to vet, accurate information from inaccurate information, and which sources are reliable and which ones aren't. But at the same time, it's often difficult to find content that is consistent, either across mediums or across themes, right? Maybe I find a visual that looks really great because it's in the JP Morgan, Advisor's Guide to the Markets. Yeah. Then I find something else on Vanguard's site or Fidelity. And those are great, but it also impacts the delivery of advice and the engagement I have with clients, because the curation is one piece, but we're kind of missing out on that consistent delivery. And then the third piece is really the communication side, right? Of how are you actually communicating? How are you talking to clients about it? I love that line, and Adam and I were joking before about pop culture and movies and TV. I love that line from Don Draper where he says something to the effect of, well, if you don't like what's being said, change the conversation. And I would argue that if the person you're talking to doesn't understand what's being said, there is no conversation, because you cannot be an effective receiver of knowledge if you don't comprehend, you don't understand. And as an advisor, you can't be an effective giver of knowledge if you don't know where people are at, what level they're on. So that's kind of the impetus, is we're kind of building these visuals, but building these other tools, as Adam kind of showed in that library, and we'll go through again to look at it. But having things that are not only visuals, but having key takeaways, having concept presentations that I'll run through. But I also wanted to hit home on this other point, as like things are coming out with AI. And I know I'm going to pick Adam's brain around AI later on in this webinar, but there's this site called Google that I just mentioned, right? And Adam, I don't know about you, but have you used this feature here, that little camera, when doing any Google searches?
You know what? Maybe by accident, I might have clicked on it. What does it do? Remind me what it does.
So it's so funny. So it's something called Google Lens. And so what's interesting is there's about 8 billion searches that go through Google Lens a month. So it's pretty widely used. And so what's the takeaway here is that people are searching more visually, where they're taking pictures of things visually and communicating that through systems. And at the same time, people want responses in a visual manner, right? So the top right here, before, if you had gone into a search engine, you typed in, I want to go to San Diego. These are the two links that would have likely come up, right? Kind of the blue hyperlinks to a Wikipedia, and then maybe a legitimate link.
Maybe.
But now when you go into it, this is what you get. You get these things called knowledge panels, which it's really highlighting images of where you're going. And obviously this differs based on if you're actually looking at locations or whatever you're searching. But the trend is moving towards people want to search visually, and they want information delivered to them in a visual manner. And that's for several different reasons. I mean, the most basic reason is because we as humans process visual information better. We're more advanced at it. Because when you look at something, what's happening is you're actually having two codes are being entered into your brain. You have a visual code, which is you seeing the image. And then you have a verbal code. It's the same thing if you saw an apple. If I was holding it right here, you would encode the image of the apple in your brain. And then you would also write out in your brain APPLE. I think that's how you spell it. So that would encode. So it helps you recall the information, helps you retain that information a lot better. So Adam, you had showed before kind of the visual library there. And yes, they're one-page visuals, but one of the other interesting things we have is we've recently added what are known as concept presentations. So when you look at things, a lot of times it's overwhelming. There's a ton of things going on. So what I have found of both presenting in a classroom, conferences, things like that, is you need to be able to control and direct people's attention. So for example, we'll go over an example in a second, but this is one of those other cases where your clients are being bombarded with tons of financial documents that aren't visual in nature, right? You're getting a tax return, which is the least pleasing thing ever to look at. You're getting a trust document that's black and white text all over the place, a social security statement, maybe a quarterly portfolio statement. And then a financial aid award letter, which there are major issues that we'll go into on a separate call with what happens there of how information is inaccurate or kind of deceivingly messaged there. But these are all opportunities where you can be using visual aids, or you should be thinking about, hey, these documents are confusing even for me to look at as a financial professional. I can't even imagine how a layman is interpreting these. These all present other opportunities to engage with clients and use other visual aids, other visual tools to demonstrate your expertise or your comprehension, to deliver a consistent experience for them. So as I mentioned before, we were talking about, well, what are some of the, what's an example of a visual that's, pretty common or that's come up? And one of them that we've seen advisors are using more is around the idea of Roth conversions, but this understanding of the pro rata rule. So for example, a client comes in and they're saying, hey, I'm reading all these articles about, doing Roth conversions. Should I do that? Or tax rates, we're in a lower tax rate environment now, or things can go up in the future. And this is a great just example that actually goes through this concept of the pro rata rule. So a couple elements in this is I would walk through and say, well, the first thing we want to do is we really need to figure out, is any part of the conversion actually going to be tax-free? Because oftentimes you may have clients that come to you and say, well, I have after-tax dollars on my account. Can't I just convert those and not pay any taxes, right? Kind of get a free ride with it. But that's not how it works. So we would basically walk through and say, well, the first thing we need to figure out is the conversion amount. What amount are we even talking about being converted from an IRA into a Roth IRA? And then we have to figure out what the tax-free proportion is. So taking our after-tax contributions, but we have to divide that by the total balance of all of our IRA accounts, right? So now we have to kind of engage in that fact finding rather than a client maybe just thinking, oh, I just have this one account, but in reality, they have multiple accounts we need to take into consideration. And then we do simple multiplication. So this is good here because this kind of lays the groundwork or like presents a framework of, well, here's some sort of formula in a visual manner. So that makes sense. But then here's an example. You have a client that has a rollover IRA, a SEP, and a traditional, and then here's the breakdown. And basically, if we looked at this, we're looking at a total of $200,000 in funds between the accounts, but the tax-free proportion is only 35%. But the client comes to you and says, hey, look, I have $50,000 in that traditional IRA and after-tax contributions. I'm just going to do a conversion of $50,000. But when you actually apply the formula, the reality is only $17,500 is a tax-free amount. So one of the more, not a super complicated concept, but something that as an advisor, I can kind of drive home that, hey, it is a little bit more complicated. We need to do a little bit deeper fact finding. Here's in practice, like and in theory, like how it actually works to figure out that tax-free proportion. I just created an educational moment that mattered for you, that I didn't have to have you fill out a questionnaire, collect all those documents, do the numbers, because I can do that later, especially if I'm talking with a prospect. But I can still engage you and actually demonstrate my expertise that, hey, like maybe 50 is the right number, or maybe it's a little bit lower, but we still have to deal with this pro rata rule.
Now I'm going to actually hold you to account because this has always thrown me. And I love this visual because the explaining this to clients when this occasion, and this actually happened to me. I remember many years ago, I ran into the same thing. I found myself, I had after tax. I learned about this rule and I just said, you know what, I can't figure it out. I'm just going to convert the whole thing. And I did it. And it was in the years when we were allowed to actually stretch it over 2 years. So in this case, just so I'm clear, and I don't want to leave anybody confused, $17,500 is the amount you can convert to a Roth of that 50 grand without having to recognize it.
Correct. Exactly. Yep.
Got it. If they wanted to do the full 70 that they have, they would only be able to do 35% of that. 70?
Exactly. Yep. Exactly.
Okay. Got it. And any additional conversion would still retain that residual amount as a after-tax contribution IRA, and you'd have to recognize tax.
Correct. Exactly.
Exactly. Okay. Got it. All right. So that's super important for those who we don't know. I set you up. So what does that really mean in real life?
Yeah. No, exactly. Right. So like I said, that's a more popular one, just as the conversations around Roth conversions come up and become popular, especially towards the end of year end. That is when we found popular use by advisors. Another one, and this is actually a newer one, and there's a couple different conversation points around this one. And this one deals with Social Security and Medicare taxes. And so we know that, hey, as an employee, we know we're paying 6.2% into Social Security on earnings under $160,200. That amount gets adjusted every year for inflation. At the same time, we know the employer is paying into that. And then if we're a self-employed taxpayer, so this is also good if we're actually having a conversation with someone who's considering maybe becoming self-employed, starting their own business, so they can actually understand all of the different tax ramifications with it. We know Medicare taxes are lower, but they apply to all of our earnings. And then we also have that additional Medicare tax, that 0.9% tax, that's hitting once your income is exceeding certain thresholds. Those thresholds aren't adjusted for inflation. That deals with another visual, but this is a good kind of guide, kind of sets it up. So a lot of times what people think is, oh, well, the self-employment tax, it's usually 15.3%, right? It's 15% is kind of the rough number we're doing. But there's actually a formula that goes through that to figure, well, what is going to be my net self-employment tax figure? We would look at the business income minus the business expenses to get the net SE income. Then what you actually do is it's not multiplied by 100, it's multiplied by this 92.35 because you get a deduction for that employer share. So that's kind of one of the confusing pieces. So it's not a straight 15.3%. It ends up being a little bit less when you factor it out this way. So that gets you your tax base times this. So now what's an example of this? Kind of just shows, hey, this is what I need to be aware of when I'm going to get hit the most. It's on that first $160,000 of earnings. If I'm going to move to be self-employed, well, now I know I'm doubling up the tax liability that I now have to be responsible because I'm both employee and employer. And then here's two scenarios we present in this, which they may apply, they may not, but these are ones that are just good to go through for educational purposes. Of let's say you have a very entrepreneurial couple that comes to you and they're married and they're involved in a lot of different things. They have different consulting businesses. They're partners and partnerships, so they're getting K1s. And so you have one instance here where spouse A is netting 100 grand, Schedule C income. They have another side business that's actually losing money, 30 grand. And then they're getting a K1 and we're assuming it's all income subject to self-employment tax of 30 grand. So at the net there, what do we have? 100 grand, right? $100,000. Mm-hmm. Then spouse B is kind of the opposite. And when we net that out, that ends up being a $100,000 loss. And so if you looked at it just from a federal income tax perspective, what would the AGI for this client be, Adam? Their adjusted gross income. If we netted 100 grand of profit against the spouse's 100 grand loss.
You're going to ask me that?
Yeah, I'm going to ask you that. Positive 100 plus negative
positive 100, negative 100. One would say that they've zero.
Zero, right? Which means if AGI is zero, we know federal income tax is zero. But guess what? Self-employment tax is 14 grand because that's a separate tax calculation. So that's something to keep in mind, is not just only focusing on federal income taxes. What I find is a lot of advisors or even individuals, everything is so focused on the federal income tax that they kind of forget about payroll taxes, self-employment tax, which we'll see those articles that come out that show, a very small percentage of people are even paying an income tax. But the tax most of us are paying are payroll taxes and self-employment taxes. So that's important to keep in mind. On the other hand, state income taxes, anything state related is always something to keep in focus. And it's definitely another way advisors can differentiate themselves, because the media is dominated by federal changes because, they're tied to bigger rates, bigger changes, but the states is where you can actually specialize a little bit more, personalize the advice you're giving because it applies to your constituents, residents in different states. And then the second example that is come up, and this is even more prevalent now, right? With the Great Resignation, people switching jobs, is we're coming up on being halfway through the year. So what happens if you switch jobs in the middle of the year, right? So you have someone who, hey, the first half of the year, they were a W-2 wage employee, $85,000. So the Social Security taxes, their portion that they paid in is $5,270. Then July 1 to the rest of the year, they get another job. And let's say they're making $95,000 and that's broken out. So the Social Security taxes they pay there are $5,890. But remember, if we go back up top, we're only really responsible for paying or owing that tax liability on the $160,000 of earnings. This is an example of someone who ends up having $180,000 of earnings, yet they had that withheld. So what does it mean? It means two things. It means that they're actually going to benefit from getting a credit on their taxes. They're going to get a refund back, or the excess amount they paid on Social Security is going to reduce any tax liability they have, which is great. That's the good news. The bad news is, or the caution here is, if you're an advisor or CPA doing a tax projection for the following year, you need to make sure that you're not incorporating in that credit in their projections. The software may do. I've seen that with even big name softwares of doing that. They'll just kind of roll it forward and assume, oh, the withholding will be the same, and the credits will be the same. But this is a case where it won't. So you need to account for not having that $1,200 of tax credits if you're doing projections, especially if someone's going to need to be required to make quarterly estimates, or you need to adjust their withholding from their wages accordingly.
Very cool. So
So
obviously,
those are just two
very rich.
examples.
Those are just two out of the, how many do you have in visiWealth right now?
So in visiWealth, we have over 200 pieces of content, and we have 75, 76 different distinct planning concepts like that. So all in the areas of education, estate, retirement, investments, and tax planning as well.
Very
so
cool.
we add,
That's a huge
add several new ones every single month in the different categories. And it's been a really cool process. We basically, we welcome suggestions from our subscribers, from what are other advisors seeing that they want to see visualized, they want to see simplified. And then oftentimes we'll let the community vote on what gets built next.
That's great. Well, what I love about it is that you're still staying very technical, right? You still need an advisor to walk them through it. In a sense, what you've done is you've said, I'm going to create a short course 101 on this to educate the client. We all know that in our businesses, what creates stickiness and relationship and value and earning not only the revenue that we charge, but also the trust is building confidence for clients, right? That we really believe that someone who's going to ask you to do this for me, do my investments, do my asset management, wealth management, and tax, insurance, investment, whatever it might be, you're really just, you've convinced them that you're a trustworthy individual. Helping people understand, even more so with the next generation kind of coming into the fray of looking for advice. We'll call them the Henrys. Next generation, probably for your boomer clients, they expect to be educated, right? They have every resource on the planet to go find out the answers. And I think the key here is if we can bring these up contextually when they have problems, they're likely to call you instead of going to Google and figure out of the 100 million responses, which is the accurate one versus how do they trust relative to you. So that's hopefully a reasonable segue. I want to share some of the things that we've been doing as Ross, too, as a practicing financial professional. One of the things that we've always been focused on is how do we help the client understand their own life? We tried to take these complex situations very similar to tax or income or maybe business. We're going to actually touch on some business stuff as well. So I saw that there's a chat. By the way, as an aside, if you have anything you want to share with us, do that. This is an open architecture, almost podcast style where you guys can contribute. If you have ideas, also resources, please put them in the chat. If you have questions you want addressed today, please make sure that you put them in there. We'll try to get to them or weave this together. For the purposes of what we're doing at Asset Map, for those of you that are familiar, our goal was to, my face is still numb, by the way. I don't know if you've been through this before, but I'm talking with a numb face. Is bleeding. It's a mess, but I'm thinking you don't get to see that really. I think the point of what we're doing is, can we figure out what's going on in life and put it up technically accurate on this visualization, whether we're talking about just an individual, or maybe we're talking about a company. I want to see that side by side. This company doesn't have a lot, or a trust. I'm thinking about what's in those trusts, and I need to talk about inventory, not whether it's good or bad, just inventory. And do I have any insight into that inventory when I look at it? As some of you know, if you're using Asset Map in their kind of post acquisition of client information, right? The fact finding phase. If you're using this in the review place, you're probably integrating this with different sources of data. And if you click on any instrument, if it's connected to a source of data, like Riskalyze Nitrogen, this is their content card or their visualization card. Or if you're going to Redtail and you want to pull up information now, or you're looking at their Dropbox folders, they can be actually tied to these individuals and instruments. And one of the things that Ross and I were talking about for a couple months was, how do we take the visuals that he's created and make them accessible to our user base when you need this, right? So when you're talking about let's say IRAs, or you're talking about expenses and taxes, or maybe their insurances, or how does a trust work? Can we actually get some of that context live into Asset Map? So here's what we've been playing with, and kudos to Ross and your team for actually pulling this off. This is an example of basically of starting with some simple information, just to give you some feedback on this family. This is Mark and Sarah Hauser. Their names have been changed. They're in their 50s, as you can see. They have a son, Jeff, 15 years old, and they also have a family trust that we learned about. We don't have a lot of information on the two of them, except that Sarah Hauser has a family business, of which actually half of it is owned by her outright. And we also learned that Jeff, her son, actually has the remainder in a trust. So actually this asset map can handle now nested entities. So in this case, Jeff has a 50% interest in this business through their trust. So all the holdings effectively roll up. And you can, if you're in the business for long enough, you kind of know some of the context there. This was done as an estate planning deal between her father and basically pushed assets to the next generation, half of it to Sarah. Mark is an executive vice president. Merck, all we know about him is that he's got an IRA. So how do you accelerate this conversation in the early days when you don't have a lot of information? What we can do is we now have, if we go to stencils, we're going to apply a stencil. If you're not familiar with this, this is basically an overlay, and I'm going to take the visiWealth stencil and I'm going to apply it. What it's going to do is it's going to create a massive fact-finding visualization that effectively, and I'm going to just show Mark for now, has every type of instrument that likely they're going to have. 95% of the likely financial instruments and or conversations we should be having now has a representation on Mark's actual asset map. You'll see things like this. I'll walk you through it. Different forms of income sources that he might have told us about. You can see even future income sources. We even put in negative cash flows or expenses that are common and typical. You can see in the qualified side, there's a whole bunch of different retirement plans that we've seen that they might jog their own memory. Oh yeah, you know what? I have a 401k from an old company I worked for, or when I was a teacher for a little bit, I have a 403b, I left it there. You can see the non-qualified stuff that we're typically used to seeing, including some things as obscure as becoming more commonplace, like crypto, might be business interests. And then of course your equity style types of instruments, homes, mortgages, et cetera, et cetera. And then lastly, insurance policies. This was intended to create a reminder in the fact-finding process, say, do you have this? Do you have that? And all of this is clickable. So as an example, one might say, okay, you know what? Yeah, actually, I forgot to tell you about my 401k. I'm going to click on that 401k and I might be inclined to say, yeah, you know what? Actually, it's over at TD. I don't know, maybe it's got 330 grand in it, and that's good enough. And now that becomes an instrument on their asset map, as most of you know. But you probably can't ignore this blue dot, right? If you click on this instrument and you go to the notes, embedded in here are all of the contextual current visualizations that visiWealth now has available. So let's do one as an example. You give me one as an example, Ross, that you want to use that we can find in any of these boxes that we want to review. Let's show you how we can do this.
Yeah, so let's do let's see, let's do the home one. The home one will be good because this actually came up this morning with a prospective client with me.
All right, I'll click on the home.
You go to home, you go to notes, that gain on sale principal residence exclusion. So very common,
I'm going to jump to it. Perfect. Got it. And this is on the presentation. Is that okay?
Yeah, sure.
Okay, fantastic. Awesome. So I'm down. This is literally live. We're doing this. Actually, and do you want to actually show the presentation?
Whatever. Yeah, you could just zoom in to show it. I don't have to go through the whole thing.
All right, good. Well, it actually comes in either PDF or PowerPoint, depending if you want animation, right?
Yeah, so exactly. So like Adam's going through here with the animation pieces, we found more success with using these of walking clients through those pieces versus, hey, here's the one page with everything on it. That's better for sending beforehand or afterhand. So this is an example that just goes through that, hey, maximum gain exclusion if somebody's selling their principal residence. They've lived in it for the greater of 2 out of 5 years, or maybe it's been less than 2, but there's a particular circumstance that causes them to move. And once again, there's our favorite term again, pro rata, of doing that calculation. So then if you go through, it basically says, hey, as an example, if somebody occupied as a principal residence, married filing joint, they sold it for $600,000, their basis was $250 because they bought it, 20, 30 years ago. Total gains $350. That entire gain amount would be excluded because it's less than the $500,000 part. So this literally came up this morning where I had a prospect called me and we were literally on the phone for 5 minutes. And her main thing was she sold her house, got $400,000. It was a referral from a CPA. I didn't get any other information collected, but we talked for a few minutes and she's going down to look at other properties she wants to buy in Florida next week. And so she's like, I'm not sure if it's going to be taxable or not. My accountant has to check the numbers. And I said, you know what? I'll get in touch with your accountant. We'll talk to see, but here's a visual for you to take a look at. We'll reconnect next week with it. And she responded immediately being like, wow, this is great. Thank you for sending me this because it took me literally no time to do it, but it appears like it did because it was thoughtful. It's something that helps her visually understand. because she told me, I started talking about a couple terms and she's literally said, I don't know any of these financial terms. I don't know what's going on. I sold the house. I want to buy another house. That's basically all I know. And I don't want to pay any taxes. So it was a great opportunity to do that and took virtually no time.
Awesome. I'm gonna clear this because we're talking about Mark and so forth. Let's add another group. So let's talk about one of the things we want to talk about was businesses. We have a business here, but we also have life insurance and a trust. I know that's come up a couple of times. So I'm going to apply this stencil. You can actually do sections of this stencil. It's actually been pretty smart. So watch what I'm going to do here. I'm just going to start talking about, let's say, insurance conversations for Mark as an example. What's going to happen is it's going to basically pre-build all the stencils that have a component for him. And you might want to talk about trust planning. And I'm going to here just go to this trust and so forth. And you're going to see how is life insurance used, or how does a ILET work? I find this one all the time is something we have to use because clients are like, well, why do I want to do this to a trust? You know, can you help me understand how this works? So I think these are really cool because let me just download it. And again, I should be probably running this in PDF.
Yeah, Adam, and I'll just add on. And this is something also we have is we do have various different trusts because we know those are some of the more complicated things. And we know oftentimes when they're coming from attorneys, there aren't great visual representations that actually go through and explain what's going on, who's going where, what's going on with the gifting, what's the value of assets that go afterwards. So just another way to simplify that also at the end of the day makes the attorney's job easier, especially if they're waiting on a client to get back to them to move forward with setting up and funding a trust. As an advisor, going through something like this can be super helpful. So two other things I want to point out is obviously like this example and the other things, I'm flying through it. And many of you may be sitting on here going, wow, that's great, but it's overwhelming. How do I know that? That's why we have the key takeaway documents as well. Because the reality is, if you're not dealing with ILETs all the time, you as an advisor may not be able to look at this right away and go, oh yeah, I can walk a client through it. No problem. So that's why we have those other key takeaways. We have those other deliverables.
What's an example of that? Wait, isn't that here?
That's on like that. Go up to member menu or go back to the top tab, Adam, the second tab in your entire thing. In the essentials.
This one?
No. The tab in the browser tab.
In the browser. Sorry. Got it. In the browser. Okay. Here I am.
So yeah, when you come here, basically you can sort by what you want to look at, not only by category, but format, right? So if you click on format, you can go to the key takeaways. And here are the bullet points, right? Here's what accompanies that explains in written format. Oh, here's how I walk through that example. So those are the three things we have now are the one-page PDF, the written key takeaways, the concept presentation that allows you to control a client or prospect's attention. And then the fourth deliverable we're excited about what's going to be coming out this summer are going to be the explainer videos, right? Where here's the 3 to 6 minute video of me or other SMEs walking through how does an ILET work? And not only how does an ILET work, but how do you use this example with a prospect or with a client to kind of get them to a sufficient level of understanding?
Cool. Let's do one more, and then I want to answer some of these questions that are coming.
Yeah, let's go to the do the dependent one real quick, because the college planning one I think is
okay. Which format do you want?
Concept visual is fine. Yeah, that's fine.
Okay. And which one are we going to use?
You know what? Scroll down.
Scrolling down.
Actually, scroll up. Sorry. Type in
scrolling up.
Sorry, type in financial aid. It's not under college.
Oh, you want me to type financial aid?
Yeah, you can just type financial aid. That should come up. Yeah, and see that one of the fourth one, financial aid filing timeline. Yeah, open that up. So like this is another one where obviously we have the more technical concepts, and then we have ones that are not as technical but super helpful, right? You have a client that comes in, even your example family you're talking about, right? A 15-year-old, so it's likely they're in the process of getting ready to fill out financial aid forms if they haven't already. What do I need to know? This year is kind of an outlier year, but they become available December 1st. When is income assessed? Prior year. Okay, so that means I have time. It's not what happened this year or the year before. It's 2 years ago. Asset assessment. Well, date the forms are actually filed. So this shows an example of if you have someone who's going to be a freshman in the fall of 2024, that is going to assess income from 2022 and assets as of the date the forms are filed in 2023. So this kind of gives you an idea where you can show a client, look, these are the most important years where we need to be very cognizant of anything we're doing there. Maybe we want to do a Roth conversion because that makes sense from a tax perspective, but at the same time, maybe that's happening during an income assessment year for financial aid. So now we just jeopardize our chance or opportunity to qualify for need-based aid. So same thing with assets, right? So this is a general one where this is one that applies to everybody. So once again, this doesn't need to be personalized. Like clients can get the understanding of, okay, prior year. I get it.
That way you can brand all this stuff too, can't you?
Correct. Yeah. So we have two different levels. So the first level is what you're viewing as essentials, which this basically, you have all sharing rights, but everything is branded visiWealth. It's the pro level where you can replace that visiWealth logo with your own logo. And that we have an update coming to this summer. So in about a month, that'll all be automated as well. So it's a little bit more of a manual process, but
yeah,
that is.
Well, so I got to know. So, most people are looking at this saying, well, okay, well, what is this going to cost me? Like, cause you can buy this, right? The point is that you can, right? You sell subscriptions to this. What is essentials cost for what all the stuff we're looking at? What does pro cost?
So for essentials, basically you get access to the whole library of content, all new releases. That's $200 for the year. And if you're an Asset Map subscriber, you get a 15% discount off. So it's too, I know it's too low. And then the pro,
it is too low.
The pro subscription is $250.
$250 to white label this for your own firm for 80 visuals that you will.
So per advisor, yeah, per
advisor. I know. So,
yeah.
I mean, it's right. So that's the thing that blows me away is that really you're taking all your educational content you've created for years and basically making it available to us in the field, which is, I love that. I mean, I think it's just really supporting. So thank you. Thank you for doing that.
No, absolutely. And so let me I wanted to add another point because I saw that question about the business side of things. So we have one here, and this is actually one. So even if you type in there, Adam, if you type in just business into the search bar.
Oh, type business. Sorry.
Yeah, just type business in there. And scroll down.
Did I do it?
Yeah, scroll down. I want to see if it took. Keep going.
Appreciation recapture.
Yeah, bottom left.
A brutal one.
Tax consequences of selling the business, right?
Okay.
So this is one where I actually talked to a CPA planner last week at a conference, and he came up to me specifically and said, hey, I use this visual and it really hit home with a client and the business broker. So once again, just an example of if you have clients who are business owners and they're going through the process, even thinking about selling a business, what's the number one thing for them? They want to get the most money possible, right? That's the goal. But what they're not being talked to about, but their CPA knows and they're not always communicating, is that, well, we need to know some of the intricacies, especially if you have someone who has a business that's tied to real estate. Because not only is the sale price important, but what is really important is how are you allocating the sale price? So this comes off of an example we did with a client who was actually selling a laundromat. And they were going back and forth between, total price is going to be $730, but we want to do $500 to the real estate and this, and obviously keep within reason. You have valuation reports, appraisals that are done. So you can't necessarily just make up what you're assigning to what, but just this communicates a couple things. So at the top part here, let's say we're allocating $330,000 of the sale price to the business. Sounds simple up, 330. Okay. But there's 3 different tax consequences that come from this. Why? Well, because part of the business, there are business assets that are being sold. So in this, 170,000 of the 330 is allocated to business assets with an adjusted basis of 200,000. So you actually have a 1231 loss as part of that. A portion is going to a non-compete, which the business owner will pick up as ordinary income. That's 10 grand ordinary income. And then the remainder is allocated to goodwill, which is 150. So off of that one sale of one part, it's not even the other second half of the transaction. You have 3 different tax treatments associated with that. And then on top of that, business owners selling real estate, well, yeah, we're looking at the sale price associated minus the basis, but you have to think about a depreciation recapture. So of that amount, 46,000 is unrecaptured 1250 gain tax at 25%. So long story short, one sale here, 2 different allocations, 5 different tax treatments with it. So this reinforces the value of an advisor, a CPA walking through to make the business owner understand, hey, it's not only about getting the highest sale price, but to make sure we're accounting for it properly. So you're netting the most amount. And oftentimes the buyers and the sellers are at odds with what they want allocated, right? That goes back to how you classify and how you classify or categorize what you're buying, right? Because I know if I'm buying a business, I want more allocated to the business assets. right? Because I can section 179, I can bonus depreciation right away versus the real estate, which I have to depreciate over a longer period of time. Or I don't want goodwill. I want goodwill allocated if I'm the seller, because that's a capital gain long term. But if I'm the buyer, I got to amortize that over 15 years. I don't want that. I want the write-off immediately in most cases. So it just provides another perspective here that, bottom line, I didn't have to, the advisor I talked to, they didn't have to collect any information specifically from the client, from the prospect on it. They're going to do that when they do it. But this general example really hit home on all the complexities and moving parts that allow that advisor to gain even more trust with their client that, yeah, this is, now I know why I'm working with you. It's not just to do my return or just to do investments. Like, you're educating me around the complexities of that, which the business is, Adam. I mean, we talk about this, it's the second child or third or fourth child.
Right. It's exactly right. Well, I hope that some of this stuff, you can imagine this in your mind's eye, how you would apply this and bring this stuff real time to your clients. Of course, you could just have, you don't have to use these stencils. You could have this available and open. Look at this still popping up.
Yeah, sorry.
To come to this. That's okay.
Because you keep going back to the main page.
I know. I don't know why. I didn't realize. Okay, sorry. I don't know what I'm doing. I'm just a technology guy. What do I do?
But that's the power, right? It's a just-in-time library.
Yeah.
And hitting on Adam's point before is, even though these are simplifying things, they're advisor-driven, client-focused visuals, right? So the point is, these are not meant to be infographics that you just send to a client and then they go off on their merry way and they're fine and then question why they need you, other than just feeding them information. But they're meant for you to connect with the client on them, to have that educational moment that matters, which, as Adam alluded to, is becoming more important for younger next-gen clients who care about that.
There's no question. And it's interesting to see where this takes. And we always open to feedback on this. For some of you that are using the asset map and then maybe going to our signals and kind of seeing, this is kind of what we call pre-running financial plan or check engine lights, or some people know it as the financial fire drills, where we're actually algorithmically running on the asset map and saying, hey, these events look challenging. I think what you'll do is you'll see more ways to explain this stuff, like long-term care. How does, what do these details mean? But I really need to explain how it works. And so sometimes we need, as you all know, to get into the educational frame before we get into, analysis on what's the funding levels look like. And are we going to get to destination on time based upon current math and logic, which obviously we can do. I see there's a comment here about Retire Up, and certainly a lot of Joel Bruckenstein shares that on his last survey, 70% of the asset map users are using also a financial planning tool. So this doesn't necessarily obviate your need for deep planning tools. What it does is just kind of puts the conversation front and center, allows us very often to just have a conversation on why are we doing this? What are we doing? What else can we do? And bring ideas to the table. And very often, as we all know, that tends to be visual and educational. Otherwise, we lose people's attention, especially in a virtual meeting like this, where we're hosting our client meetings remotely. Who knows what they're doing? If you're doing email, they're not paying attention to you. Whatever, sure. Whereas when they really need to know that, then they want to remember that you had that visual, you had that way of describing it. And guess what? Incredibly referable, right? You show this to people, usually they're saying, gosh, nobody's ever taken the time to educate me on this stuff. They thought it was over my head, or I've always wondered how that worked, or why we never did that, because some other buddy told them I should do that. Or NUA, great example, right? Net unrealized appreciation.
Yeah.
Hearing that you could do this with stock if you work in a company. No one understands this, but I noticed that you do have an NUA graphic in here, which is just great. And look how smart you look when you bring that to the forefront. I think that's really the key. So
no, you're exactly right, Adam. It's kind of like, it's like answering the question, like, tell me you know about investment planning without telling me you know about investment planning, right? Gosh, you're showing, and you're really demonstrating that. Another answer to that question about the business side of things. So I will tell you two of the ones that are coming out later this month. One of them is going to be focused on tax differences between if someone's an S corp, shareholder, partner in a partnership, employee and owner of a C corporation. And then another one that Adam and I, we were kind of mentioning beforehand that we're going to do is one on something called PTE, pass-through entity tax, which I would encourage anyone out there who's not a CPA to at least do a little bit of reading to learn about that. So it's actually something that came out right around when Tax Cuts and Jobs Act came out. I live in Connecticut. We, of course, were the first state to jump on board with mandating it. And essentially what it is it mandates a tax that is actually paid by a pass-through entity, which is kind of doesn't make any sense, right? Why would they pass everything through and then you pay at the individual level?
Yeah.
But they did it as a workaround so states could actually get funding ahead of time. And it allows you to work around, to some degree, the $10,000 SALT limitation. So before when that came out, there were only a couple of states. Now you have 36 states that are offering it or making it at least voluntary. So we're going to be going through that. So once again, it's tying back to the state side of things, how you can add value and help deliver an educational moment that matters, especially if the CPAs know this. They're in the nitty gritty, like doing the calcs and doing it, but they may not be communicating the value that will come up. And now that may be part of the conversations around business entity choice. So that keeps expanding. That is something that is always a popular topic of, or should I be an LLC? Should we be an S Corp? Right? That always keeps coming up. And now here's another layer to actually look at it, where if you combine that with even looking outside the scope, but look at audit rates, for example, like S corporation and partnership audit rates are 0.05%. So in some instances, if you have clients that are concerned about audit exposure, it may be worth it to pay a couple extra $100 or $1,000 to have an additional tax return prepared as a 1065 versus just picking it up on a Schedule C, especially if you have a husband and wife, 99.1% owner, something like that. So there are these other areas that we're focused on providing visuals to have those conversations in a more proactive manner with clients.
What is visiWealth the code for asset map users to get the discount you talked about? What is the?
It's actually just asset map. So if you go to visiWealth,
asset.
if you want to subscribe for visiWealth, which will enable you to have access to the stencil, if you're an asset map user, it's just asset map, or one word altogether.
visiWealth.org.
Yep.
And thank you for doing that. We really appreciate that. And yes, I'm going to keep going through, but this, I'm thinking this is basically how you do it.
Yeah. Yeah. So if you go to, click out of that, go to like advisor subscriptions or whatever.
I'm in it. Yeah. Well, I'm already a subscriber. So
no, but you still go to the page.
Oh, okay. This one?
I don't know.
Do you still see my screen anymore?
I do. Yeah. X out of it.
People can figure
Advisor
it out.
Solutions.
Look, figure it out.
Yeah, whatever. Advisor Solutions. And then you
sorry.
can kind of, if you click on that page, it'll also show you what are the differences. Like what do you get
there
access
you
to
go.
in the content? And then you would just click that, type an asset map, and that applies
Goodness.
that 15%.
You're going to kill the market. I mean, look, the reality is that you're, continuing to do this stuff. Someone asked, is this going to basically replace advanced markets online stuff that many of the companies use? I know that you're having conversations with many of them to replace their advanced markets with what you're doing. So in many ways, who knows? I'm not a person who tends to like to wait. I like the cool gadgets early. If you're inclined to go do this, you can figure out a way to get it compliance approved. I'm sure there's support in there. You notice that there was all the disclosure language if you need it. And I don't want to speak for you, but
No, that's right. And I think there's a couple other things to hit home with it, is that even if there's a situation where you can't use it, let's say with clients, like let's say you can use some of them, but not all of them are approved. It's also a great education tool, a great refresher for yourself to go back and actually refresh on the concepts even before even having a conversation with clients. The other thing is all you need to do is really be able to use one of them, right? Given where the price point is, like if you only used one of these out of a content library of 200, what time would it have taken you? It would have taken you probably 3 to 5 hours between actually building it out, writing it. I mean, this is what I do, Adam. Like this is one of them I talked about is on this note, which then this gets up here, then we work with the design team and we do it. So that's a lot of time that goes in that even if you use one of them, it makes sense. But the other key thing, and this ties to, I alluded before, that concept of AI, is that the beauty of these is that it still relies on you communicating it, right? That's where you can really personalize things. I'm a bigger fan of personalizing by being a person, like actually communicating with people versus having everything on the page be super personalized. We know we have other planning tools that do that, and that's fine, but this is the time where you can actually shine and actually focus on people and connect with them in real time. And that's really what the best teachers do. And then you kind of are viewed as a teacher. We all remember that, right? Everyone remembers a favorite teacher they had. And that's where you kind of move into that memory bank in association in the minds of your clients.
Well, it's funny. I'll take it even a step further. For the last, let's call it now 17 or 18 years, my office when I was advisor full time was set up as a conference room. I didn't have a desk. I had a credenza, but I had a massive conference table and a 6-foot touchscreen in the front of the room. It was a smart board that I got off a truck because it's Philly, and that's you get everything off a truck. Right? They had a private school had an extra. They got rid of it. My buddy called me up and says, "You want it?" I said, "Yeah." And literally I would stand in front of the room and I would do this stuff. I would draw it like a teacher and create that association of there's the teacher standing in front of you teaching you. There's a much standing also. It was a much different relationship with the clients, especially when I allowed them to come up to the whiteboard and express their concerns and show me what the problem was. So I think for those of you that are mindful of visuals, and clearly you're here because you appreciate that, find ways to really display information that's valuable. But of course, you got to create efficiency. So we've both done a lot of work to make it easier so that you can release your original AI, which we call advisor intelligence, in real time to their situation and go prove that you're really worth keeping on team. I think we're all going to see a lot of pressure, Ross, in terms of what's coming next in direct technology that's going to squeeze margins for a lot of this industry. And those that really remain on top are going to be the ones that educate and connect and engage people, become an invaluable resource, as I'm sure you already are, but you got to not just be for one generation, now for the next. So find ways to also educate. I think you could probably use these visuals also in your social media. I think you could also use them in direct to client contact if you got it. So if you want to just say, hey, this is I'm sending this out with some thoughts. I think that would be a really great use case here, for which you just doubled the value of the thing. So
absolutely.
Anyway,
Yeah. And that's what we found. We even did ones recently. Two of the other ones we saw were more popular, sending out direct to clients, where explanations around how I bonds work, right? When the interest rate was 9.62%, I didn't see there were so many people I encountered later in that summer that were like, oh, I'm not going to invest in it because I didn't get in May. So I'm not going to get the full 6 months. And it's like, that's not how it works. Why do people think that? Because there's no good, clear examples of it. FDIC insurance limits, same thing. A lot of great information on NCUA site, FDIC site, but it's like 30 pages long. So we have a 1-page visual that goes through examples of, hey, if you have a single ownership account, joint ownership, trust account, that you can just put in front of a client and have a conversation without overwhelming them. And then Adam, I promised I was going to make another movie or pop culture reference, and I have to. This is actually what I wanted to call this webinar, but I didn't communicate with you at all about it. I don't know about you. I'm a huge fan of the Indiana Jones series.
Okay.
Just the character, right? And there's a new movie coming out.
I know. That's a big deal.
I'm not being paid or anything by that team for saying anything. But one of the movies I loved was, do you remember Indiana Jones and the Last Crusade? They're going after the Holy Grail, right? And so one of the premises of that movie that aligns with this is, what are they searching for in order to find the Grail? It's the map. Like everyone is after the map, right? And you can't dispute that. You need the map to figure out, where do you go? Where's the canyon of the crescent moon? And how do you find that? But at the same time, I don't know if you remember, Sean Connery's character, right? Indiana Jones's father, and that the whole time is like, look, we got to go get the diary because there's more than the map in the diary. And so that's what connects me to
which
this.
stones to walk on, I think it was.
Exactly. Yep.
All right. When to duck.
Well, he asked him, he's like 3 challenges. And then Harrison Ford's like, okay, what are they? Yeah. And Sean Connery responds, he says, I wrote them down so I wouldn't have to remember. And I think that's a key thing here, is because we are so bombarded with tons of information. Our brains are at capacity, that the goal of these tools is not for you to memorize everything, but how can you access content quickly? How can you engage in conversations in the map, beyond the map? And that's how that's my analogy for it, is that you need the map, which is perfect. But then if you're not seasoned advisor, or maybe you're coming up with something you haven't seen in a long time, how great is it to be able to go into something and pull out that content to have those conversations in an engaging manner with clients and prospects?
Well said. And I really appreciate you taking the time to do this, really educating everybody, educating me again, and also taking the time to build the stencil. So for all those of you people that are using Asset Map already and you want to use visiWealth, certainly go check it out. No pressure to do it, right? It's another resource. We hope you find value in it. Thank you so much for giving our people even more discounts, your fantastic pricing. I think that's really going to have a fantastic ROI, give you a lot of peace of mind too, that you have this library available to everybody. And also, if you want the stencil, you're going to have to reach out to, it's in our stencil library, which basically means you just have to email support@assetmap.com and say, hey, add the visiWealth stencil to my library, and they'll just upload it for you. We have kept that available just for your subscribers. So that'll hopefully be additional utility that you can play with, come up with new ideas, make your own stencils, build off of Ross's stencils, see what else you can do with it. And I think that's That's great. So if you're not an asset map user, I just put up the website there for, we do also reciprocate with visiWealth. So we give a 10% discount for those people that want to subscribe to asset map and want the map for their holy grail. They can get it. It's not as expensive as fighting off 20 marauders. But anyway, we're both about, creating utility. So hopefully this is valuable to you. If you have any other contributions, now's your time. We'll cut it short if we need to. We have a recording. It'll be available to everybody who signed up here at this webinar. So if you had to leave or jump, we'll say goodbye.
No, that's great, Adam. Thank you so much for having me. And I love that
Of course.
comment. Whoever said Indiana, let it go.
That's Glenn. Very cool. Awesome. All right. Thanks, everybody. With that, we're going to close up. You know how to reach us. Get to us on social. Follow us on LinkedIn. Reach out to us. We pretty much follow all channels. And of course, you could probably figure out our emails pretty quickly. But I think LinkedIn is a great way to do it if you need to get in touch with us. Ross, any other closing comments?
That's it, my friend.
All right,
Thank you for having me.
All right, great. So we'll see you soon and have a great day, everybody.